Okay, that's force number one. The other force is called the macro force. This one looks at the big picture stuff of the world. Like, for example, what's happening geopolitically speaking? Is there a threat of war? Is there a change in politics? It looks at the central bank levels at the Fed, interest rates, monetary policy, things like that. Big picture stuff. And I like to think of these two forces as sort of like the chicken or the egg problem. Which one comes first? Which one explains our economic reality? So I hope that makes sense. But using this framework, let's look at Bitcoin. And by the way, full credit to Benjamin Cowan for sharing this on his YouTube channel. He discovered one of the most important concepts in Bitcoin, which is something called the 50-week moving average. It sounds complicated, but it's really simple. If you take the average closing price, meaning the price at the end of the week, for the last 50 weeks, you get a certain trend line. And what Ben noticed is that when Bitcoin is in a bull cycle, it's always stayed above that line. But when Bitcoin's price goes below that 50-week moving average level, that marked the end of the bull cycle and the beginning of the long cool-off period. That's what people call the bear market. Now, I know this sounds kind of like astrology, but this is backed by data going back more than a decade. And this week, we broke below that price point. That's not good, right? Because when investors all start to see that same pattern, they think, okay, that's it, right? That's the end of the bull cycle. So I'm going to sell and I'm going to come back in a year from now. If price breaks trend, when that happens, their rules tell them to sell. And when you have enough people following that same pattern or same signal, that's when it becomes the reality. So that's the technical explanation behind what's happening. But then there's the second force, the macro force. And this theory says this had nothing to do with the charts at all. This sell-off is because investors think we are going into what's called a liquidity transition. And here's what I mean. Let's look at the Federal Reserve's balance sheet, this chart right here. We've been in what's called quantitative tightening, or QT, meaning the Fed has been slowly removing the liquidity or money out of the financial system. The way they do this is over time by letting bonds roll off the balance sheet and just not replacing them. That slowly drains the financial system. But recently, the Fed told us it's going to end quantitative tightening sooner than expected. They're going to end it on December